If you think about it, it's ultimately the narrative that causes an asset to pump. This is not only true in the crypto market, but in the stock market and other markets besides. This begs the question of what the biggest narratives of 2024 will be. Well, a recent report by one of the most forward-thinking asset managers has the answers. That's why today we're going to summarize this report and tell you how you could use its findings to make a massive profit over the next 8 months and beyond. The report that we'll be summarizing today is titled Big Ideas 2024. It was published by ARK Invest last month, and we'll leave a link to the full report in the description. I'll also quickly note that nothing in this video is financial advice. It's purely educational content about the biggest narratives of 2024. On that note, the report begins with a disclaimer of its own. The authors explain that investing in cutting-edge tech is extremely risky. They note 6 risks in total, the most significant of which are competition and regulation. You never know which companies will win or how governments will respond. With that disclaimer out of the way, the authors unpack the first big narrative of 2024, and that's technological convergence. They predict that there will be a convergence between AI, blockchain, genetic sequencing, energy storage, and robotics between now and the end of the decade. The result is that economic growth could more than double from 3% to 7%, and that the annual returns on the companies and projects involved in these technologies could average 40% per year. As a fun fact, BTC has returned almost 7x per year on average since its launch, with most gains happening early on. What's interesting is that the authors see AI as the cornerstone of this prediction, noting that it's the one technology that will be heavily leveraged by the other 4. They point out that AI has been evolving faster than anticipated, and that artificial general intelligence, or AGI, could be achieved by 2026. As you might have guessed, AGI describes the type of AI that's capable of doing anything a human can. It should come as no surprise then that the authors predict that AI will be the single largest contributor to GDP in the coming years. This likely assumes that AGI will be achieved and that will be truly useful. As another fun fact, it's unlikely that AGI will be truly useful if it's unable to analyze reality objectively. As we've seen with existing AI models, they tend to be extremely biased. If this bias bleeds into AGI, it probably won't be very useful because it won't be able to know what's actually going on in the world. Anyways, the authors then go on to provide a detailed breakdown of their predictions for each of the 5 technologies over the next few years. The TLDR is that they will experience exponential adoption and growth. This, once again, assumes that each of these technologies can deliver on their implicit promises. By the way, if you're enjoying the video so far, be sure to smash that like button to help others enjoy it. And subscribe to the channel and ping the notification bell to make sure you enjoy the next one. You're most kind.
We interrupt this programme for an emergency crypto weather forecast. Get ready for a whirlwind of savings. We're seeing a high-pressure sign-up bonus system forming in the northeast, with some exchanges offering up to $60,000. Lush. In the south, we'll be seeing some heavy discounts on hardware wallets, so watch out for those if you're going to be out and about. And then, over in central areas, there's a high chance of trading fee discounts, which should be setting in later on, up to 60% off there. Amazing! For a more comprehensive forecast, visit the Coin Bureau deals page using the link in the description. These deals are red hot, so make sure to take all necessary precautions. That's all for the forecast. Now back to our scheduled programme.
Now, this ties into the second big narrative of 2024, which is obviously AI. The authors start by saying that the iPhone moment of ChatGPT has left companies tripping over themselves to figure out how they can leverage AI. The authors predict that it could increase employee productivity by 4x. To drive the point home, the authors provide a graph showcasing how many times AI was mentioned in earnings calls before and after the launch of ChatGPT. What's eye-opening is that AI was already being mentioned in earnings calls prior to the ChatGPT's launch. That number tripled after its launch, however. Now, you would be forgiven for thinking that AI would immediately put unskilled people out of work. Well, the authors touch on some surprising research. And that's that AI has actually improved the performance of the least skilled employees, while the most skilled employees saw only marginal benefits. Not only that, but AI seems to have disrupted creative labor the most. The authors highlight the incredible improvements to text-to-image platforms like Midjourney. Some of you might have also heard that OpenAI is on the brink of releasing a text-to-video platform called Sora. To drive the point home, the authors provide a graph showcasing the cost of writing 1,000 works. Naturally, it's fallen off a cliff ever since tools like ChatGPT have been released. At the same time, the cost of training AI has been on a sharp decline, making these tools even better. There's just one caveat, and that's data. The authors predict that AI models will essentially exhaust the data sources that they can be trained on by the end of the year. While there are other data sources and sets to be found, their lack of accessibility could slow down or even cap the evolution of AI models. The silver lining is that the existing data will still be enough to train AI models to the point where they can increase worker productivity significantly. Although a 4x increase in productivity is the base case of the authors, they reveal that the productivity gains could range anywhere between 2.5x and 6.5x. Now, the third big narrative of 2024 is another biggie, and that's Bitcoin. Funnily enough, the authors commence with another disclaimer, stressing that BTC and crypto are risky. This is presumably because ARK Invest offers a spot Bitcoin ETF and doesn't want to risk getting sued. Anyhow, the authors state that crypto is becoming its own bona fide asset class, with BTC as the top student, so to speak. They compare BTC's qualities to other assets before doing the same for returns. As you can see, BTC's average annual return has been 40% over the last 7 years, dominating other assets. The authors reveal the secret to getting these gains is to hodl. As proof, they point to the fact that 100% of BTC holders who have hodled over the last 5 years are in profit. Of course, this could change if BTC crashes in late May or early June, but the key takeaway is clear. Patience equals profits. More about the potential Q2 crash in the description, but moving on. Now, besides its impressive annual returns, what makes BTC so impressive as an asset class is its lack of correlation to other assets. Based on the author's calculations, BTC's correlation to stocks has only been around 0.41 over the last 5 years, with even lower correlations for other asset classes. The caveat is that this could change because of the spot Bitcoin ETFs. If institutional investors see BTC as a safe haven asset, then BTC will become more correlated to gold, and some would say this is happening already. Conversely, if institutional investors see BTC as a risk asset, it will become more correlated to stocks. Logically, BTC qualities make it a logical asset to have an allocation to. The only question is, how much? According to the authors, holding around 20% of your portfolio in BTC offered the greatest risk-adjusted reward in 2023. They note the remaining 80% as being 40% gold, 30% stocks, and 10% commodities. Over the last 5 years, though, they note that the ideal allocation to BTC has been around 5% of one's portfolio. Unfortunately, they don't say what the other allocations should have been, but the idea of having a barbell approach consisting of gold plus commodities and cutting-edge tech plus crypto is pretty appealing. This relates to the fourth biggest narrative in 2024, which is Bitcoin again. For most of this section, the authors explained that everything that happened in 2023 and how it was a resolution for the chaos of 2022. For those unfamiliar, the crypto market imploded in 2022 and staged an epic recovery in 2023. The only forward-looking statement can be found at the end of the section. In addition to growth in new Bitcoin technologies like ordinals, the authors believe that the spot Bitcoin ETFs, the Bitcoin halving, institutional acceptance, and regulatory improvements will be key BTC trends to watch in 2024. This pertains to the fifth big narrative of 2024, which is smart contracts. This seems to be code for altcoins, specifically smart contract cryptocurrencies. The authors reopen this with a bold prediction, and that's that the value of smart contract cryptos will rise by 32% on average between now and 2030. Nice. Now, if you're wondering which crypto specifically, the authors kindly provide a list. Ethereum, BNB, Solana, Avalanche, Tron, and Polygon. A very peculiar selection, given the fact that BNB is arguably still an exchange token, Tron is facing regulatory scrutiny, and Polygon isn't as big as some other smart contract cryptos. This might have something to do with the fact that the authors focus their analysis on transaction fees and stablecoin transactions. They note that stablecoin transfer volumes have exceeded those of MasterCard, which is odd given that most of these flows are related to trading and DeFi, not payments. Regardless, the authors then cover the explosion of tokenized real-world assets, where Stellar enters the chat. If you watched our video about tokenized RWAs, you'll know that Stellar's overrepresentation in the niche is due to Franklin Templeton launching its tokenized bond offering on Stellar. What's ironic is that the authors also cover all of the outages that Solana has experienced. This is ironic because ARK Invest CEO Cathie Wood literally said that Solana was better than Ethereum. Fortunately for her, the chart doesn't show the outage Solana experienced in February or its current performance. In all seriousness, the authors present another uncomfortable chart, and that's the number of transactions on Ethereum versus its layer 2s. You can clearly see the number of transactions on Ethereum have been sideways to down, while its transactions on layer 2s have gone parabolic. The reason why should be evident to anyone who's used Ethereum: transaction fees. The authors reveal just how strong the correlation is between transaction fee costs and user adoption. It's too bad that their numbers don't reflect Ethereum's Dankun upgrade, which significantly lowered L2 fees. To their credit though, they hit the nail on the head about why Solana has been so popular. It's a monolithic blockchain. In plain English, everything is in one place. With Ethereum and layer 2s, you consistently have to bridge your assets around, which makes for a poor user experience. After reviewing how crypto could lower the cost of financial services, that is, upset the incumbents, the authors predict that smart contract cryptos will generate $450 billion in annual fees by 2030. To put things into perspective, they only generated around $8 billion of fees in 2023. Now, the sixth biggest narrative of 2024 is completely unrelated to crypto, and that's digital consumers. This means connecting TV advertising, social media commerce, sports betting, oddly enough, AI-assisted video games, and AI-enabled hardware, which presumably includes stuff like the Apple Vision Pro. What's bizarre is that this narrative seems to hinge on the assumption that the average work week will shorten because of AI, which seems unlikely. It's much more likely that the average work week will stay the same length, as that's what will be required for employers to capitalize on AI productivity gains. So don't start daydreaming of 3-day weekends just yet. Whatever the case, the assumption is that people will spend less time working and more time consuming stuff online. It's possible this could happen simply as a consequence of the working from home trend. Less time commuting means more time spent on other stuff, at least in theory. Following a review of the rapid growth in things like e-commerce and gambling, the authors make another bold prediction, and that's that AI will make it possible for gamers to develop their own experiences. This likewise seems unlikely, as it would eat into the profits of gaming companies. The seventh biggest narrative of 2024 fits hand in glove with the digital consumer theme, and that's digital wallets. The key theme here seems to be closed-loop payments. In other words, companies creating their own payment ecosystems and including digital wallets as part of their offerings. Keeping everything in-house will not only increase profits for these companies, but also save costs for consumers. As a result, the amount of closed-loop payments could increase by 24x between now and 2030. This assumes that banks will allow these so-called shadow banks to continue operating. Now, the eighth biggest narrative of 2024, according to ARK Invest, is precision therapies, most of which involve some sort of genetic modification. It's telling that there's no mention of cures, only therapies. Providing a cure probably wouldn't be good for profits, but that's a topic for another time and a different channel. Lo and behold, the report authors note that the main purpose of precision therapy, such as gene editing, is to address diseases that conventional drugs can't treat. What's fascinating is that the word cure does come up, but only in reference to very rare diseases that are difficult for big pharma companies to profit from. Moving on, the ninth biggest narrative of 2024 falls into the same bucket, and that's multinomic tools, which again are related to genetics. To be honest, most of this section flew over our heads as it deals with obscenely technical stuff like proteomic throughput and depth, much more complex than any crypto. If anyone can explain all of this in simple terms, in the comments, please be my guest. Now, the 10th biggest narrative of 2024 is electric vehicles, which honestly seems to have missed the mark. As some of you may have heard, EVs are falling out of favor, as everyone is realizing that hybrids are the better way to go. It's crazy how the solution to most problems almost always lies somewhere in the middle. In any case, the authors seem to have missed the memo, as they predict that 95 to 100% of vehicle sales will be EVs in 2030. This narrative seems to hinge on the assumptions that AI will make autonomous vehicles possible. What's strange is that the authors simultaneously admit that the demand for EVs has fallen off a cliff by providing a series of headlines to that effect. They juxtapose these with the growing market share of EVs, but omit the fact that most of this growth is coming from Asia, particularly China, where EVs are cheap. To add insult to injury, they note that EV manufacturers are struggling to scale profitably, and yet the cost of producing EVs are apparently on par with that of combustion vehicles. This disconnect can again be explained by the enormous geographical differences in the EV industry and in car manufacturing. Anyhow, the 11th narrative of 2024 is another spicy topic, and that's robotics. The authors come out the gates proclaiming that this intersection between AI and robotics will create general-purpose robots that will do everything and result in amazing economic growth and a better future for all. Unless they become Terminators instead, of course. But jokes aside, the authors note that, like AI, the field of computer vision has been evolving fast. And soon, robots will be able to see the world as well as we do. One of the effects of this has been a decrease in cost of industrial robots, leading to a surge in demand and a tripling in performance relative to humans. By now, you can probably predict the title of one of the subsequent slides, and I quote, "Many companies are likely to deploy more robots than humans." Translation, companies are buying robots instead of hiring people. The authors note that this is freeing humans from tedious physical tasks. Very debatable. The 12th narrative of 2024 is equally debatable, and that's the emergence of robo-taxis. To be fair, there are already robo-taxis operating in 20 cities globally, according to the authors. The thing is that they envision a world where all cars are replaced by robo-taxis because of cost, safety, and other factors. As we've learned over the last few years, however, safety often comes at the cost of freedom. In this case, it also comes at the cost of millions of drivers who work in existing transportation industries. Overcoming these hurdles won't be easy, and that will likely stifle the adoption of this particular tech. Now, the 13th narrative of 2024 is similar to the 12th, and that's autonomous logistics, aka AI supply chains. The difference is that this narrative depends on more exotic transportation tech like drone delivery. As a fun fact, Chinese commerce giant Alibaba will be testing deliveries via space rockets. Whereas rocket deliveries are still a ways away, commerce giants have already been leveraging rolling robots, autonomous trucks, and drones for deliveries. The authors note that AI pilots are better than human pilots, and use simulated dogfights between AI and human pilots as proof. Spooky. Realistically though, delivery drones and the like will probably be used for low-cost stuff when mainstream adoption comes. Think food deliveries and such. The authors also note that delivery drones could come in handy for emergency situations, as they can reach those in need much faster. But back to those rockets. The 14th narrative of 2024 is all about reusable rockets, which are seriously cool if you've ever seen them. If you haven't, then be sure to check out videos of SpaceX's rocket landing. We'll leave a link to one of those videos in the description if you can't find one. As expected, this section is all about technologies that companies like SpaceX are working on, such as mobile to satellite connectivity. It goes without saying that the associated rocket technologies will decrease the cost of space travel, hopefully to the point that holidays in space become possible. Now, the 15th biggest narrative of 2024 is one of the most underrated, and that's 3D printing. FYI, there has been huge advancements in 3D printing, everything from firearms to artificial organs. What's wild is that Tesla is starting to use 3D printed parts in cars due to the cost efficiency. The reason why you don't hear about 3D printing more often seems to be because it's been difficult for the associated companies to capture value from their products, something the authors note. They believe 3D printing companies will become more profitable once they start scrapping user data. Yikes. This brings me to the big question, and that's how you can use the findings of this report to make massive profit over the next 8 months and beyond. The short answer is to invest in energy. It's honestly shocking that energy didn't come up as one of the biggest narratives in 2024. Consider that the AI chips being produced by NVIDIA consume as much power as a house. Millions of these chips are being produced and brought online, and if AI becomes as big as many expect it to be, there eventually will be billions of chips. Now, factor in all of the other energy-intensive narratives. Bitcoin mining requires lots of energy. Smart contract cryptos require less energy, but monolithic chains like Solana are operated by validators that run out of literal data centers. That's energy. The same thing is true for consuming things online. The entire digital ecosystem runs on data centers. More energy. Precision therapies and multinomic tools will probably require energy too, though we don't have a sense for how much. On the flip side, we're pretty sure that electrifying the entire grid to support EVs is going to require an amount of energy and infrastructure that will probably take decades to roll out. The same is true for robotics and robotaxis. As much as companies are eager to adopt these technologies, it probably won't take long for them to realize that humans have one big advantage. They don't need to be plugged in. The rising use of robotics in logistics alone could be enough to strain grids. The rockets are where the energy calculations get truly insane. According to a post in the SpaceX subreddit, a single rocket launch uses around 26 gigawatts of power to take off. In 2023, SpaceX launched 96 rockets, totaling almost 2,500 gigawatts of power. If our calculations are correct, that's enough energy to power the UK for 50 years. 50 years. The only technology that doesn't seem to require more energy is 3D printing, and this is yet another reason why the industry is underrated. That said, if 3D printing becomes popular enough, its total energy consumption could surpass that of traditional manufacturing as a whole. No matter how you slice it, energy lies one layer below all of these innovations, and that means it needs to be top of mind when coming to profiting from these technologies. The best part about energy is that it will fundamentally serve as a hedge against the energy hurdles these technologies will have to overcome. Let's just hope that the geopolitical situation doesn't spiral out of control to the point that the hardware required for all of these technologies to operate becomes a hurdle. This is another overlooked factor when it comes to analyzing cutting-edge tech. And it's yet another that could be very bullish for energy. It could even be bullish for the BRICS countries. More about that in the description. Well, that's all for today's video. If you found it informative, smash that like button to let us know. If you want to stay informed, subscribe to the channel and ping that notification bell. And if you want to inform others about the biggest narratives of 2024, be sure to share this video with them. As always, thank you so much for watching, and I'll see you next time. This is Jessica signing off.